Imagine a decades-long partnership, built carefully over nearly a century, suddenly coming to an abrupt end. Just weeks ago, Canadian Prime Minister Mark Carney stunned the nation by declaring that the U.S.-Canada economic relationship is officially over. And he's not just making words, he's taking action, and what follows could shake North American economies to their core. Canada isn't just any trading partner. It's the United States' largest, surpassing even China and Mexico in key sectors. Every year, $750 billion in trade moves across the border, supporting nearly 9 million American jobs. Redirecting even a portion of that, $300 billion to be precise, away from U.S. markets is not a minor tweak. It's a seismic shift with ripple effects across industries, businesses, and households. This level of integration didn't happen overnight. After World War II, both nations recognized the mutual benefits of economic collaboration. The 1965 Auto Pact connected automotive manufacturing across borders. The 1988 Free Trade Agreement removed most tariffs. NAFTA in 1994 intertwined supply chains even further, followed by USMCA in 2020. Today, a single car might cross the border 7 or 8 times before completion. Canadian steel, aluminum, and electronics flowing south. American machinery and tech powering Canadian industries. Lumber, oil, and electricity move both ways, supporting homes, refineries, and businesses. Families, students, and companies operate seamlessly across the border, while defense and intelligence ties remain among the deepest in the world. Then came the tariffs. February 2025, the U.S. imposed 25% tariffs on Canadian steel and aluminum, claiming national security. But Canada is America's closest military ally. Soldiers train and fight together. The logic was laughably weak. Carney initially pursued diplomacy, offering exemptions, compromises, and alternative frameworks, but Washington dismissed every effort. Public remarks suggesting Canada should simply become the 51st state only hardened Canadian resolve. By mid-February, $32 billion in steel, aluminum, and automotive parts faced new tariffs. 4 days later, Carney responded with $30 billion in counter-tariffs: bourbon from Kentucky, motorcycles from Wisconsin, orange juice from Florida. Strategic, precise, hitting politically sensitive regions. Escalation continued in March, another $125 billion in counter-tariffs, affecting everything from appliances to industrial equipment. Warnings from U.S. business groups were ignored. But this is just the beginning. Carney didn't stop at retaliation. Behind the scenes, Canada began quietly diversifying trade, strengthening ties with the EU, Asia-Pacific, and South America. New ports, railways, and logistics hubs were planned. Domestic policies like the Buy Canadian initiative redirected $36 billion of federal spending toward Canadian-made products. Targeted support for steel, lumber, and automotive industries ensured they could pivot away from U.S. dependence. Incentives encouraged Canadians to purchase domestic goods, from vehicles to electronics. The implications for the United States are enormous. Automotive supply chains could face disruptions, production slowdowns, and rising costs. Energy dependence on Canadian oil means even a modest 15% reduction could drive up gas prices across northern states. Families, small businesses, and industries are bracing for impact, and the American public remains largely unaware of the scale. This isn't just trade, it's economic strategy, national sovereignty, and a bold statement. Canada is no longer willing to be subordinate. The stage is set for one of the most dramatic shifts in North American economic history, and the world is watching every move. And while the U.S. scrambles to understand the immediate consequences, Canada is already executing the next phase of its plan. Infrastructure investment alone, $5 billion over 7 years, is transforming trade routes. Pacific Coast ports in Vancouver and Prince Rupert are being expanded to handle increased Asian trade. Rail connections from Alberta's industrial heartland to these ports are being upgraded, while eastern seaboard logistics and border facilities with non-U.S. partners are also receiving major boosts. This isn't just spending, it's building a new economic backbone, ensuring Canada can move goods efficiently without relying on the U.S. The Buy Canadian policy is equally game-changing. Redirecting $36 billion in federal procurement to domestic manufacturers doesn't just protect jobs, it reshapes market dynamics. Canadian steel, lumber, and automotive parts will increasingly flow to domestic buyers, reducing reliance on American imports. And for sectors hit hardest by tariffs, targeted support is already rolling out. Subsidies for steel production, loan guarantees for lumber mills pivoting to Asian markets, and tax incentives for automakers forming European partnerships ensure industries adapt quickly. Trade diversification is central to the strategy. Canada is aggressively expanding EU trade, aiming for a 40% increase through export promotion and partnerships in aerospace, pharmaceuticals, and clean technology. In Asia-Pacific, engagement with Japan, South Korea, Singapore, and Vietnam is deepening, aiming to nearly double exports by 2035. South America sees new frameworks with Brazil, Argentina, Chile, and exploratory talks with Colombia and Peru. Meanwhile, the Middle East and Africa are targeted for energy technology, education services, and agricultural technology exports. Domestic consumption incentives amplify the strategy. Tax credits for Canadian-made vehicles, rebates for electronics and appliances, and labeling requirements promoting homegrown products all drive money back into the local economy. The U.S. impact is undeniable. Automotive supply chains face potential shortages and increased costs. Energy supply adjustments could raise gasoline and heating costs for millions. Small and medium businesses reliant on Canadian inputs are grappling with new pricing pressures. And this is just the beginning. Analysts warn that if Canada successfully shifts its focus to global markets, the U.S. could lose access to billions in trade, creating economic shockwaves across multiple sectors. Mark Carney's bold strategy demonstrates that Canada is taking control of its economic destiny. No longer willing to be dependent, the nation is charting a path that prioritizes resilience, sovereignty, and strategic partnerships worldwide. What we are witnessing is more than a policy shift. It's a recalibration of North American economic power. And as the world watches, one question remains. How will the United States respond to a neighbor that has just declared it's no longer under its economic thumb? And as Canada pushes forward, the geopolitical stakes are rising. The United States, initially dismissive, is now scrambling to respond. Analysts in Washington are poring over the details of Carney's plan, realizing this isn't a bluff. Canada's deliberate redirection of trade flows, expansion into new markets, and domestic policy incentives signal a nation taking full control of its economic future. Consider the automotive sector. A single vehicle crosses the U.S.-Canada border multiple times during production. If Canada shifts even 20% of its automotive parts manufacturing to European or Asian markets, U.S. assembly plants face immediate component shortages. Production slows, costs rise, and the ripple effect hits American workers and families directly. It's not just numbers on a spreadsheet, it's tangible, everyday impact. Energy is another critical front. Canada supplies roughly 60% of U.S. crude oil imports. With expanded exports to Asia, even a modest 15% reduction to the U.S. could trigger higher gasoline and heating costs across the Midwest and Northeast. Families, small businesses, and industries will feel the pinch, and replacing Canadian energy isn't easy. Domestic production takes years, and alternative imports bring geopolitical risk and higher costs. Meanwhile, Canadian industries are thriving. Steel mills, lumber producers, and automotive component manufacturers are finding new global partners. Research and development in electric vehicle components is accelerating. Exports to the EU, Asia-Pacific, South America, and Africa are climbing steadily. Every move is calculated to reduce dependence on the U.S., diversify revenue streams, and strengthen domestic capabilities. But perhaps the most striking element is public perception. Canadians overwhelmingly support Canada's Mark Carney Canada First approach. The message is clear. Economic sovereignty matters, and the nation is ready to defend its interests.